Question 1. What is the primary distinction between first-party and third-party cyber insurance coverage? A. First-party coverage protects the insurer against the insured's cyber attacks, while third-party coverage protects the insured against attacks from external parties. B. First-party coverage compensates the insured for damages caused by cyber events, while third-party coverage covers liabilities to other parties affected by those events. C. First-party coverage focuses solely on data breach incidents, whereas third-party coverage applies to any cyber incident. D. First-party coverage is applicable to public entities only, whereas third-party coverage is limited to private companies. Answer B. Explanation. First-party cyber insurance coverage is designed to reimburse the insured for their own direct losses due to cyber incidents such as data breaches, business interruption, or the cost of responding to a cyber attack. Third-party coverage, on the other hand, protects the insured from liabilities to external parties such as customers or regulators resulting from a data breach or cyber attack. The differences lie in who the coverage protects. First party for the insured's own losses and third party for liabilities incurred due to the insured's actions. Question 2. Mr. Thomas, a small business owner, has recently experienced a cyber attack that disrupted his company's operations for several days. He is now worried about his financial losses due to the business interruption. What type of coverage should he seek under his cyber insurance policy? A. Network security liability. B. Business interruption coverage. C. Social engineering fraud coverage. D. Media liability coverage. Answer B. Explanation. Business interruption coverage is the correct type of coverage for Mr. Thomas to address the financial losses resulting from the disruption of his company's operations due to a cyber attack. This coverage compensates for the loss of income caused by the interruption, including downtime and potential reputational damage. Network security liability covers damages arising from security breaches affecting third parties, while social engineering fraud and media liability deal with fraud and defamation, respectively, which do not directly address business interruption. Question 3. Which of the following is a common vulnerability in information systems that could be exploited during a cyber attack? A. Comprehensive data encryption. B. Multi-factor authentication. C. Weak passwords and authentication. D. Regular security audits and penetration testing. Answer C. Explanation. Weak passwords and authentication methods are one of the most common vulnerabilities that cyber attackers exploit. Many breaches occur because individuals or organizations fail to implement strong authentication protocols, leaving systems open to attacks such as brute force password cracking. In contrast, comprehensive data encryption, multi-factor authentication, and regular security audits are essential security measures that help mitigate the risk of exploitation. These best practices significantly reduce vulnerabilities within information systems. Question 4. Which of the following is a key component of risk assessment when underwriting a cyber insurance policy? A. The number of employees in the company. B. The client's history of cyber incidents. C. The financial performance of the insured. D. The company's physical office locations. Answer B. Explanation. The client's history of cyber incidents is a critical component of risk assessment when underwriting a cyber insurance policy. Insurers will evaluate the frequency and severity of previous cyber incidents to determine the risk level of insuring the organization. Factors like the number of employees, financial performance, and office locations are relevant in assessing operational risk but do not directly assess the client's cybersecurity posture, which is key in underwriting a cyber policy. Question 5. Which of the following cybersecurity frameworks is most commonly referenced in cyber insurance policies to ensure an organization's cybersecurity efforts are in compliance with industry standards? A. ISO 27001. B. General Data Protection Regulations GDPR. C. Health Insurance Portability and Accountability Act, HIPAA. D. Cybersecurity Information Sharing Act, CISA. Answer A. Explanation. ISO 27001 is one of the most widely recognized cybersecurity frameworks often referenced in cyber insurance policies. It provides a systematic approach to managing sensitive company information, ensuring confidentiality, integrity, and availability, while GDPR and HIPAA govern data protection and privacy laws in specific industries. E.g., healthcare and European entities, and CISA addresses information sharing. ISO 27001 is directly linked to cybersecurity risk management practices and is frequently used as a benchmark in the cyber insurance market. Question 6. Which of the following represents a scenario where an organization might need to activate cyber insurance coverage for cyber extortion? A. A ransomware attack results in the organization's data being held hostage. B. A denial of service (DOS) attack causes operational disruption for several hours. C. A data breach exposes customer information without any extortion demands. D. A third-party vendor experiences a security breach that affects the organization's system. Answer A. Explanation. Cyber extortion coverage, typically related to ransomware, kicks in when an organization is threatened with the release or destruction of its data unless a ransom is paid. Ransomware attacks are a form of cyber extortion where the attacker demands payment in exchange for decryption keys. The other scenarios: DOS attacks, data breaches without extortion, and vendor-related breaches do not qualify for cyber extortion coverage, as no direct ransom demand is involved in these cases. Question 7. In the event of a cyber attack, which of the following actions would most likely be covered under network security liability insurance? A. Legal fees related to defending against claims from a data breach. B. Loss of income from business interruption due to system downtime. C. Expenses related to notifying customers of a data breach. D. Damage caused to the reputation of the organization. Answer A. Explanation. Network security liability insurance typically covers legal fees and defense costs resulting from third-party claims due to security breaches, including data breaches. This type of insurance is designed to protect the insured from liabilities related to hacking incidents, unauthorized access, and data theft. Loss of income, notification costs, and reputational damage are covered under other types of insurance, such as business interruption and data breach coverage. Question 8. Which of the following is true regarding exclusions in cyber insurance policies? A. Cyber insurance policies typically exclude coverage for social engineering fraud. B. Cyber insurance policies always cover fines related to regulatory compliance failures. C. Cyber insurance policies generally do not cover damages caused by unpatched software vulnerabilities. D. Cyber insurance policies usually exclude coverage for third-party vendor incidents. Answer A. Explanation. Social engineering fraud, such as phishing scams, is often excluded from cyber insurance policies or may require additional coverage to be added to the policy. Many standard cyber insurance policies exclude coverage for losses resulting from social engineering attacks, which involve manipulation rather than technical vulnerabilities, while regulatory fines, unpatched software vulnerabilities, and third-party vendor incidents may or may not be covered depending on the specific policy terms. Social engineering fraud remains a frequent exclusion. Question 9. A company has a cyber insurance policy with a $1 million coverage limit and a $50,000 deductible. If the company incurs a $200,000 loss due to a cyber attack, how much will the insurance company pay? A. $150,000. B. $200,000. C. $250,000. D. $1 million. Answer A. Explanation. In this scenario, the deductible of $50,000 must be subtracted from the $200,000 loss, leaving $150,000 to be covered by the insurance policy. The deductible is the amount the insured must pay out of pocket before the policy begins to pay for covered losses. Therefore, the insurance company would pay $150,000 toward the loss. The policy's coverage limit, $1 million, does not affect the payout because the total loss is below the limit. Question 10. Which of the following is most likely to increase the premium rate for a cyber insurance policy? A. The organization implements multi-factor authentication for all users. B. The organization operates in an industry with minimal cybersecurity risks. C. The organization has a comprehensive incident response plan in place. D. The organization has a history of multiple cybersecurity incidents. Answer D. Explanation. A history of multiple cybersecurity incidents increases the risk for an insurer, which is likely to raise the premium rate for the organization. Insurers take into account past incidents when underwriting a policy, as a higher frequency of incidents indicates a higher likelihood of future claims, while strong cybersecurity measures, multi-factor authentication, incident response plans can lower the perceived risk. A history of multiple incidents signals an ongoing risk that would lead to higher premiums. Question 11. Which of the following is an example of a common vulnerability that might lead to a successful man-in-the-middle attack? A. Weak encryption protocols for communication channels. B. Strong password policies and multi-factor authentication. C. Regular updates to firewall and intrusion detection systems. D. Encryption of sensitive data stored in databases. Answer A. Explanation. Weak encryption protocols for communication channels can lead to successful man-in-the-middle (MISM) attacks. In a MITM attack, an attacker intercepts and potentially alters the communication between two parties who believe they are directly communicating with each other. Without strong encryption, the attacker can read, modify, or inject malicious content into the communication. In contrast, strong password policies, multi-factor authentication, and encryption of stored data are defensive measures that help prevent these types of attacks. Question 12. Which of the following is a key purpose of a cyber risk assessment? A. To identify and manage the technical skills of employees. B. To ensure that all business processes are ensured. C. To evaluate the potential vulnerabilities in an organization's IT infrastructure. D. To calculate the exact monetary value of all intellectual property. Answer. C. Explanation. A cyber risk assessment is used to evaluate an organization's IT infrastructure for potential vulnerabilities. This helps identify weak points that could be exploited by attackers, such as outdated software or insufficient access controls. It is critical for developing appropriate mitigation strategies. Identifying employees' technical skills or calculating intellectual property values are not primary goals of a cyber risk assessment. Question 13. What type of cyber insurance coverage would most likely apply if an organization suffers a data breach resulting in the exposure of customer information? A. Data breach coverage. B. Business interruption coverage. C. Network security liability. D. Media liability insurance. Answer A. Explanation. Data breach coverage specifically protects against the financial losses resulting from the exposure or theft of sensitive data. This coverage helps cover costs like legal fees, notification expenses, and potential fines. Network security liability addresses issues related to the breach of the organization's network, while business interruption coverage deals with income losses from downtime, not the breach itself. Question 14. Which of the following statements is true about social engineering attacks? A. They exploit technical vulnerabilities in software systems. B. They involve manipulating individuals to disclose sensitive information. C. They always result in direct financial loss. D. They can be prevented by implementing strong firewalls. Answer. B. Explanation. Social engineering attacks rely on manipulating people into disclosing confidential or sensitive information rather than exploiting technical vulnerabilities. Common examples include phishing emails or phone calls from someone pretending to be a trusted figure. While firewalls and other technical defenses can help mitigate risks, they do not prevent social engineering attacks, which rely on human error. Question 15. Which of the following is typically excluded from cyber liability insurance policies? A. Business interruption losses due to a cyber attack. B. Ransom payments in case of a ransomware attack. C. Fines and penalties resulting from violations of data protection regulations. D. Legal defense costs related to a data breach lawsuit. Answer. C. Explanation. Cyber liability insurance policies typically exclude coverage for fines and penalties that result from violations of data protection laws, such as GDPR or CCPA. These regulations impose financial penalties on organizations that fail to protect personal data, but insurance does not cover such regulatory fines. Coverage often includes costs for business interruption, ransom payments with certain limitations, and legal defense costs. Question 16. In the context of cyber insurance, what is a waiting period? A. The time it takes to investigate a cyber incident before determining if the policy will cover it. B. The period before a policyholder must pay the deductible. C. The amount of time before an insured can file a claim for coverage. D. The period after an incident before insurance coverage begins to apply. Answer. D. Explanation. The waiting period in cyber insurance refers to the time that must pass after an incident before insurance coverage begins to apply. This can be a specific time frame, such as a few days, and is commonly seen in cases of business interruption or system downtime. It ensures that the insured organization has experienced a significant disruption before coverage is activated. Question 17. Which of the following is a potential consequence of a company failing to update its software and systems regularly? A. Higher employee turnover. B. Increased likelihood of cyber attacks exploiting vulnerabilities. C. Improved network performance. D. Reduced insurance premiums. Answer B. Explanation. Failing to regularly update software and systems increases the risk of cyber attacks because attackers often exploit known vulnerabilities in outdated software. Regular updates are crucial for patching security holes that could be targeted by cyber criminals. The other options, employee turnover, improved performance, and reduced premiums, are not directly related to the risks of outdated systems. Question 18. Which of the following best describes a third-party vendor risk in the context of cyber insurance? A. The risk associated with data loss from an external contractor or service provider. B. The risk of cyber attacks initiated by an organization's own employees. C. The risk of being sued by a third party due to a data breach. D. The risk of financial losses due to a third-party cybersecurity insurance policy. Answer A. Explanation. Third-party vendor risks in cyber insurance refer to the potential for a data breach or cyber attack to occur through an external contractor or service provider. Many organizations rely on third-party vendors for services like cloud storage, payroll, or IT support, which can introduce vulnerabilities. If these vendors are breached, the organization could suffer data loss or other cyber-related consequences. Question 19. What is the primary purpose of a cyber insurance policy's sublimits? A. To provide higher coverage for high-risk activities. B. To limit the total payout amount for certain types of losses. C. To exclude coverage for certain incidents entirely. D. To define the duration of coverage for specific incidents. Answer B. Explanation. Sublimits are specific limits placed on certain types of coverage within a cyber insurance policy. For example, a policy may have a sublimit for covering the costs associated with data breach notification separate from the overall policy limit. These sublimits ensure that the insurer does not face excessive exposure for particular types of claims while still providing some level of coverage for those incidents. Question 20. Which of the following actions would most likely help mitigate the risk of a cyber attack? A. Increasing the number of employees with access to sensitive data. B. Implementing encryption for sensitive data both in transit and at rest. C. Reducing network security protocols to improve performance. D. Disabling multi-factor authentication to simplify user access. Answer B. Explanation. Implementing encryption for sensitive data both in transit while being transferred and at rest when stored is one of the most effective ways to mitigate the risk of a cyber attack. Encryption ensures that even if an attacker gains unauthorized access, they will not be able to read the data without the decryption key. The other actions listed, such as increasing access or reducing security protocols, would increase the risk of a cyber attack. Question 21. Which of the following would likely be covered under a forensic investigation policy endorsement in a cyber insurance policy? A. The cost of legal defense related to a cybersecurity breach. B. The cost of restoring lost or damaged data. C. The cost of investigating and identifying the cause of a cyber incident. D. The cost of public relations efforts to manage reputation damage. Answer C. Explanation. A forensic investigation policy endorsement is designed to cover the costs of investigating a cyber incident, including identifying how the breach or attack occurred, the extent of the damage, and the parties responsible. This coverage helps organizations understand the incident scope and inform recovery efforts. Legal defense, data restoration, and reputation management are covered under different types of endorsements. Question 22. Which of the following is an example of a zero-day vulnerability in cybersecurity? A. A newly discovered vulnerability that is exploited before a patch is available. B. A vulnerability that is publicly known and has been patched. C. A vulnerability that is only present in outdated software. D. A vulnerability that can only be exploited by insiders with authorized access. Answer A. Explanation. A zero-day vulnerability refers to a security flaw that is discovered and exploited by attackers before the software vendor has a chance to release a patch or fix for it. This makes zero-day vulnerabilities particularly dangerous as there is no defense or mitigation available at the time of the attack. They differ from vulnerabilities that are publicly known and patched, which can be defended against through updates. Question 23. What is the primary benefit of implementing multi-factor authentication (MFA) in cybersecurity? A. Increases the speed of user logins. B. It reduces the need for complex passwords. C. It adds an additional layer of security by requiring multiple forms of verification. D. It automatically updates software to fix vulnerabilities. Answer. C. Explanation. Multi-factor authentication (MFA) increases security by requiring users to provide two or more verification factors. Something they know, password, something they have, security token, or something they are, biometric data. This makes it much harder for attackers to gain unauthorized access, even if they have one piece of the puzzle like a password. Question 24. Which type of cyber attack is typically used to overwhelm a network or website by flooding it with traffic? A. Phishing. B. Ransomware. C. Denial of service (DOS). D. SQL injection. Answer. C. Explanation. A denial of service (DOS) attack overwhelms a network or website with a flood of traffic, making it unavailable to legitimate users. In contrast, phishing aims to steal sensitive information. Ransomware encrypts files for ransom, and SQL injection exploits vulnerabilities in a website's database system. Question 25. What is the purpose of a cyber incident response plan? A. To determine the insurance coverage needed after a cyber attack. B. To outline the steps an organization should take to respond to a cyber attack. C. To ensure the organization has enough resources to recover financially. D. To analyze the market value of affected data. Answer. B. Explanation. A cyber incident response plan outlines the steps an organization should take when responding to a cyber attack. This plan includes actions like detecting the incident, containing the breach, notifying stakeholders, and recovering systems. It helps organizations minimize the damage and recover more effectively. While insurance and data valuation are important, they are not the focus of the response plan. Question 26. Which of the following is an example of phishing? A. An attacker installs malware on a computer through a software vulnerability. B. A user is tricked into providing personal information through a fraudulent email. C. An attacker locks a user's files and demands a ransom for decryption. D. A cybercriminal floods a network with traffic to cause service disruption. Answer. B. Explanation. Phishing is a type of social engineering attack where attackers trick individuals into revealing sensitive information such as usernames, passwords, or credit card numbers, usually by pretending to be a legitimate entity in an email or other communication. It does not involve malware, ransomware, or denial of service attacks, which are different types of cyber threats. Question 27. Which of the following is a potential drawback of relying on cloud services for data storage? A. Cloud services eliminate the need for data encryption. B. Cloud providers always guarantee 100% uptime. C. Data stored in the cloud may be subject to unauthorized access if not properly secured. D. Cloud services are more expensive than on-premises data storage. Answer. C. Explanation. One potential drawback of using cloud services is the risk of unauthorized access to data if proper security measures like encryption and access controls are not implemented. While cloud services are often highly secure, the responsibility for ensuring data protection lies with both the provider and the user. The other options are incorrect. Cloud services can still require encryption, uptime can vary, and cloud services may not always be more expensive. Question 20. What is a patch management system in cybersecurity? A. A tool that monitors network traffic for suspicious activity. B. A process of applying updates and fixes to software to address vulnerabilities. C. A method of backing up important data. D. A strategy for preventing phishing attacks. Answer. B. Explanation. Patch management refers to the process of applying updates and fixes, patches to software to address security vulnerabilities, bugs, and performance issues. Keeping software updated is critical to preventing cyber attacks that exploit known vulnerabilities. While network monitoring and backup systems are important, patch management specifically targets software vulnerabilities. Question 29. What is the purpose of a ransomware attack? A. To steal intellectual property for profit. B. To gain unauthorized access to a system for espionage. C. To encrypt a victim's files and demand payment for decryption. D. To destroy a victim's data permanently. Answer. C. Explanation. A ransomware attack encrypts a victim's files and demands a ransom, often in cryptocurrency, for the decryption key. It does not aim to steal intellectual property or permanently destroy data, although the data may be inaccessible if the ransom is not paid. Espionage is a different type of cyber attack. Question 30. Which of the following would be covered by cyber insurance in the event of a successful phishing attack? A. The financial loss from stolen funds due to fraudulent wire transfers. B. The cost of repairing damaged hardware. C. The expense of notifying affected customers about the breach. D. The legal costs associated with defending a lawsuit filed by the hacker. Answer A. Explanation. Cyber insurance would cover the financial loss resulting from stolen funds due to fraudulent wire transfers caused by a phishing attack. Many policies also cover the cost of customer notification, option C, but they would not typically cover hardware repair or defense against a lawsuit filed by the hacker, as that would fall outside the scope of the breach.